If Robert Kiyosaki is right about 2026, then millions of people aren't just going to lose money. They're going to lose everything. And I mean everything. Their savings, their retirement accounts, their sense of security, the life they spent decades building, gone. And the scary part? This isn't some new prediction he just made up. He's been saying this for decades. The crash is coming. The system is broken. Paper money is an illusion. Most people laughed. Most people kept scrolling. But this time, something is different. Because the numbers aren't just trending toward collapse anymore. They're accelerating toward it. And if this collapse actually happens, then there may only be one place left to run. Bitcoin. Quick note before we go deeper. This is financial education, not financial advice. Do your own research, talk to a professional, and make your own decisions. What we're doing here is thinking out loud about a very real possibility. Now let's get into it. Stay with me until minute 17, because what I'm about to show you changes the way you think about money, permanently. And if you're new here, this channel exists for one reason, to help you see what's happening in the financial world before the headlines catch up. If that's what you're looking for, subscribe and hit the bell. Because what we're covering today is not the kind of thing most people talk about until it's already too late. Morning, afternoon, or night for you right now? Drop it in the comments. I'm genuinely curious where in the world people are watching this from. Let's begin. This video took a long time to put together, not because the information is hard to find, but because framing it honestly, without either dismissing the risk or catastrophizing beyond what the evidence supports, requires care. So let's be clear going in, nobody knows exactly how this plays out. Not Kiyosaki, not the IMF, not the Fed, not me. What we can do, and what we're going to do right now, is reason carefully about what the data suggests, and let you decide what it means for you. To understand Kiyosaki's warning, you first have to understand how he sees the world. And it's radically different from how most people see it. Most people look at the economy and see a system that's messy, maybe flawed, but fundamentally trying to work. Kiyosaki doesn't see that. He sees a system that was designed deliberately to keep the majority of people dependent. Dependent on jobs, on government pensions, on banks, on paper currencies that governments can print in unlimited quantities. He calls the dollar, and most modern currencies, fake money. Not because it's worthless right now, but because it has no anchor, no gold, no silver, no real constraint on how much of it gets created. And his argument is simple. If something can be created infinitely, it can be made worthless infinitely. He points to Rich Dad, Poor Dad, published back in 1997, and says the core message hasn't changed. Assets make you rich, liabilities make you poor, and the government will always find a way to tax, inflate, and erode the wealth of people who trust the system blindly. Now here's where it gets uncomfortable. If the system is designed to keep you dependent, then what happens when it starts failing? Not just slowing down, not just a rough quarter. What happens when the entire architecture, the debt structure, the pension promises, the paper currency, starts to visibly crack? That's what Kiyosaki says is coming in 2026. And when you look at the data, it's not hard to see why he's saying it. The United States national debt has now crossed $36 trillion and climbing. Global debt is approaching $315 trillion according to the Institute of International Finance's early 2026 data. Interest payments on U.S. debt alone are now running at over $1 trillion per year, surpassing what the country spends on defense or Medicare individually. Let that land for a second. The largest economy on earth is spending more servicing its debt than protecting its borders. And the retirement crisis layered on top of that? Roughly 50% of Americans approaching retirement age have less than $100,000 saved. Social Security's trust fund, according to the Social Security Administration's own projections, is expected to face significant shortfalls within the next decade. If even half of what Kiyosaki is predicting is true, then the next crash won't look like 2008. It'll be something different, something deeper. And in a few minutes, I'll show you exactly why this time Bitcoin changes the outcome, or at least why a growing number of very serious people believe it does. Let's go back for a moment. 2008, the housing market collapses. Banks are over-leveraged. Millions of Americans lose their homes. What happened next? Bailouts. The government stepped in, injected trillions, bailed out the banks, and called it a rescue. Most people were furious, but the system survived. Then 2020, a global pandemic shuts down the world economy. Supply chains collapse. Unemployment spikes overnight. What happened? Governments around the world printed money at a scale never seen before in modern history. The U.S. Federal Reserve's balance sheet ballooned from about $4 trillion to nearly $9 trillion in under 2 years. Stimulus checks went out. Interest rates were slashed to near zero. The system survived again. But here's the question nobody's asking loudly enough. What happens when the next crisis hits and there's nothing left to throw at it? Because here's where we are right now in April 2026. Interest rates were raised aggressively to fight the inflation that the money printing caused. That worked, partially. But it also created a ticking clock under the debt load of corporations, governments, and consumers who borrowed cheap. If central banks can't print their way out this time, then the entire system starts to crack. And that's not a fringe idea anymore. The Bank for International Settlements, which is essentially the central bank of central banks, has been publishing warnings about unsustainable debt trajectories for 3 consecutive years now. The IMF's World Economic Outlook from early 2026 flagged elevated risks from sovereign debt stress in multiple major economies. These aren't Bitcoin podcasters. These are the institutions that run the global financial system. And they're saying it's fragile. Now here's the part nobody's paying attention to. Kiyosaki's prediction isn't just that a crash is coming. It's that the tools used to stop the last 3 crashes have already been used up. Think about it. Every bailout, every round of quantitative easing, every interest rate cut, each one leaves less room for the next emergency. You can't keep refinancing infinity. And here's the twist that makes this more dangerous than any previous moment. Asset bubbles exist everywhere simultaneously. Real estate in most major cities remains historically overvalued relative to income. Equity markets, despite recent volatility, are still trading at elevated price-to-earnings ratios by historical standards. Corporate bond markets are laden with debt that was issued when rates were near zero and now has to be refinanced at dramatically higher costs. If everything's inflated, then everything can fall, and not one thing at a time. Potentially, several things at once. Comment below if you're genuinely paying attention to what's happening in the financial system right now. I want to know who's awake in this audience, because the people watching this video are, statistically speaking, already more financially aware than most. And that gap between the aware and the unaware is about to matter more than it ever has before. What would you do if this actually plays out? Start thinking about that question seriously, not theoretically, concretely. Because people who answer that question in advance make very different decisions than people who are figuring it out in real time under pressure. But here's where things start to break down. Because Kiyosaki isn't just warning people, he's positioning. And what he's positioning into tells us everything about where he thinks this is going. For most of his career, Kiyosaki's answer was simple. Gold, silver, real assets, things the government can't print. He called them God's money, assets that have held value across thousands of years of human history, across the collapse of empires, currencies, and governments. And he still believes in both. But then something changed. Around 2019, 2020, Kiyosaki started talking about Bitcoin differently, not just as a speculative asset, as a serious hedge, as digital gold with properties that physical gold simply doesn't have. And his message evolved into something he now says consistently: if you know a collapse is coming, you don't stay in the system, you exit it. And his 3 exits are gold, silver, and Bitcoin. But Bitcoin, he now argues, is different. Because if money itself is the problem, then Bitcoin might be the solution. Think about what makes Bitcoin structurally unique. There will only ever be 21 million Bitcoin. That's not a policy. It's not a promise. It's hard-coded into the protocol itself. No government, no central bank, no committee can change that number. As of April 2026, approximately 19.8 million Bitcoin have already been mined. That means over 94% of all Bitcoin that will ever exist is already in circulation. The remaining supply is being released on a fixed schedule, decreasing every 4 years at an event called the halving, the most recent of which occurred in April 2024. No central control, no single point of authority that can decide to expand the supply when things get difficult. Global liquidity. Bitcoin trades 24 hours a day, 7 days a week, across every time zone, every continent. No market hours, no capital controls that can stop it. And here's the intellectual argument at the core of all of this. If trust in governments drops, then trust has to move somewhere. It always does. Throughout history, when one form of money collapsed, people found another. Romans moved to gold after the denarius was debased. Weimar Germans turned to foreign currencies when the mark hyperinflated. Argentinians today hold US dollars because they trust it more than the peso. Trust migrates. It doesn't disappear. And the question being asked now, seriously, by serious economists and investors, is whether Bitcoin is the place that trust migrates to next. That somewhere might already be Bitcoin. Because here's what the price tells you, not as a trading signal, but as a signal of direction. Bitcoin went from under $10,000 in early 2020 to over $69,000 in late 2021. It crashed, spectacularly, down to $15,000 in 2022. And then, without any government bailout, without any central bank intervention, without any rescue, it recovered. And not just recovered, it pushed to new all-time highs above $100,000 in late 2024. That is a resilience test. Most assets that crash 80% die. Bitcoin has crashed 80% multiple times, and it's still here. Hit like if this is starting to make sense, because we're just getting to the part that changes everything. Now, here's the twist nobody talks about enough. While the average person has been going back and forth on whether Bitcoin is real or a bubble or a scam, institutions have been quietly building positions, not retail traders, not crypto enthusiasts. BlackRock, the world's largest asset manager, with over $10 trillion under management, launched a Bitcoin spot ETF in January 2024. It became one of the fastest ETFs in history to reach $10 billion in assets. Fidelity, Invesco, Franklin Templeton, all launched similar products. MicroStrategy, now rebranded as Strategy, holds over 500,000 Bitcoin on its corporate balance sheet as of early 2026, having accumulated over 5 years. Several publicly traded companies have followed their model, adding Bitcoin as a treasury reserve asset. And if institutions are buying Bitcoin while the system is weakening, then what do they see coming? These aren't gamblers. These are firms with teams of analysts, risk managers, macroeconomists, and compliance departments. They don't make billion-dollar bets on vibes. They're seeing something. And what they're seeing, when you read the actual white papers and shareholder letters, is a macro hedge. A hedge against currency debasement. A hedge against the very scenario Kiyosaki has been describing for 25 years. What happens next is the real story, because the supply math is about to change everything. Now here's where the supply math becomes genuinely alarming. If institutions are accumulating Bitcoin at scale, and the total supply is capped at 21 million, and over 30% of the existing supply is estimated to be permanently lost in wallets whose private keys are gone forever, then the actual liquid, tradable Bitcoin is a fraction of the headline number. If they're early, then everyone else is late. This is where smart money is already moving, and most retail investors are still deciding whether to take it seriously. And that tension between those who have positioned and those who haven't is exactly what creates the kind of wealth transfer that Kiyosaki has been warning about. Not a transfer from the rich to the poor, from the unprepared to the prepared. Are you positioned or just watching? Take a moment and think about that honestly. But there's one risk almost nobody is talking about in these conversations, and I'd be doing you a disservice if I didn't address it directly. Let's be honest, Bitcoin is not a guaranteed outcome. Anyone who tells you it is selling you something. The volatility is real. Bitcoin has lost 80% of its value 3 separate times in its history. If you bought near the peak in late 2021 and needed that money by 2022, you experienced real devastating losses. That's not a theoretical risk. It happened to real people. The regulatory environment is also genuinely uncertain. In the United States, the SEC and other regulatory bodies spent years in litigation with major crypto platforms. The regulatory framework is still evolving. A hostile policy shift, particularly around self-custody or institutional access, could change the landscape materially. And the adoption question is still open. Bitcoin works as a store of value only if enough people agree that it does. Its value is not derived from cash flows or dividends or industrial utility. It's derived from consensus, from the shared belief that it holds value. That belief has been remarkably durable, but it is not guaranteed. There's also the energy argument. Bitcoin's proof-of-work mining consumes significant electricity, and as climate policy tightens globally, that could become a regulatory pressure point in certain jurisdictions. And the technological risk, while low in Bitcoin specifically, is never zero. Quantum computing advances, while still years away from threatening Bitcoin's cryptography, are a long-horizon variable serious investors don't ignore. These are real risks, not enough to dismiss the thesis, but enough to ensure you never put more into any single asset than you can afford to lose. That principle doesn't change regardless of how compelling the macro argument sounds. If Bitcoin fails, then there is no escape. Not from crypto, not from digital assets in general. Because if the flagship, the most battle-tested, the most decentralized of all crypto assets fails, then the thesis collapses. But if it doesn't fail, then what we're watching right now might be the largest transfer of wealth of our lifetime. Larger than the dot-com era. Larger than the real estate boom of the 2000s. Because this isn't just a new asset class. If the macro thesis is correct, if the debt system buckles, if the fiat currency loses its grip, if institutional adoption continues, then Bitcoin isn't just appreciating, it's absorbing trust. The same trust that used to live in governments and central banks and pension promises. And trust, once it moves, doesn't move back. Share this with someone who needs to see this before it's too late, not because it's a buy signal, but because they need to be thinking about this now, not in 6 months. So let's bring all of this together. Kiyosaki's worldview rests on one foundational idea. The system is not broken by accident. It was built in a way that concentrates wealth upward and dilutes savings downward over time. And it can sustain that for a long time, until it can't. The mechanisms that kept it stable, the ability to print, to bail out, to lower rates, have been tested to their limits. Right now, in April 2026, the US government is running deficits that require constant debt issuance. Interest payments are now the single largest line item in the federal budget, larger than Social Security, defense, or Medicare in isolation. Global central banks are caught between fighting inflation and preventing debt crises. That's not a comfortable position. That's a corner. If Kiyosaki is wrong, then nothing changes. The system wobbles, recovers, the debt gets managed, the currency holds, and Bitcoin remains a niche alternative asset for risk-tolerant investors. Life goes on. But if he's right, then the system breaks. Not suddenly, maybe. Not in one catastrophic morning, but a slow, grinding, undeniable erosion of purchasing power, a retirement crisis that plays out over years, a loss of faith in the institutions that were supposed to protect savings. And the people who saw it early, the ones who understood what was happening before it became front-page news, those people don't get wiped out. They aren't the ones asking what happened. They're the ones who had already made their decisions. And the uncomfortable truth is that the window between early and too late is never as wide as it feels when you're inside it. Do you think the system can hold? Genuinely. What's your gut telling you? Drop it in the comments. I read every single one. If 2026 is the turning point, then the decisions you make today decide where you stand on the other side of it. Not just financial decisions, intellectual ones. Are you paying attention to the data? Are you questioning the assumptions you've been handed about how money works? Are you thinking about what you actually own versus what you're promised? Because that's really what this is about. Not panic, not rushing into any asset blindly, but informed, deliberate, clear-eyed thinking before the moment of crisis removes that luxury. Kiyosaki has been right about the direction of the system, even when he's been wrong about the timing. Bitcoin has been declared dead over 400 times in mainstream media, and yet here we are in 2026 with the world's largest asset managers running Bitcoin funds. The narrative is shifting. The question is whether you're shifting with it, or waiting for permission that may never come. If you want to stay ahead of what's coming, subscribe to this channel, not because we have all the answers, but because we ask the questions that matter, before most people know they should be asking them. And if this video made you think, even just a little differently, hit like. It genuinely helps more people find content like this. The wealth continuum exists because financial literacy shouldn't be a luxury. It should be a foundation. Stay informed. Think independently. Stay early. I'll see you in the next one.